Good afternoon, traders. Welcome to the Moy Analytics Afternoon Energy Podcast for May 26th, going into the 27th. Going to start off with the natural gas. We've rolled into the July contract, left a minor bearish reversal above. I'm just going to back up a bit for a second in June. We were bullish for multiple different levels at 276.90, 272.50, and a number of others in here. Those are all on hold. Then I said the trade below 296.60 warned a pressure. And Friday, we left a minor bearish reversal above, which we came off 89 ticks from the 294.80 level. So we'd broken below this line. We also broke below this formation, which projects us downward 250 ticks. We rallied back up, tried to take it out, and rolled back over. So decent trade back above this formation, which is going to come in at 296.70 plus 0.8 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time in the June contract. That'll warn of renewed strength. In the July contract, we've broken below some similar formations here, the lower of which is going to come in at 309.10 minus 0.2 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time. A decent break above there will warn of decent strength. But setting that aside, it's bearish now. I would just make one other note here. I'm just going to zoom out for a second, go to a daily level chart. It's going to be kind of messy here with all these lines all over the place. Oh, sorry, that was the wrong one. That was the June. With the July contract, I would just note that for this entire stretch down here from 476.40 all the way down to here, we came just shy of this exhaustion level down here at 287.40 with a 289.30 low and rallied. So this could be a large pullback within a larger bullish correction, or we might be headed for these lows to make an even deeper impact, which we would have to see whether this holds or not. Just wanted to give you a heads up on that. Anyway, on to the crude. Crude left a medium bearish reversal above on the day, but a maintained gap higher tomorrow will leave a minor bullish reversal below that will negate that medium bearish reversal above and warrant a decent strength for days. We retired a number of calls in here. We were bullish above 95.52. We saw $13.95 of the strength warned about in there. A couple other bullish calls in here. Those were all retired this morning as we were trading below those. And then in the July, we held exhaustion with a 105.21 high and rolled over $15.80. And a number of other bearish calls in here. I said to get short below 102.31 and we attained $12.90 from, and the break below 97.95. Also brought in $8.54. I also said that if this rolls into a full bearish correction, your minimum target is going to be 86.27. Still, we're still shy of that with an 89.41 low. Also, decent trade above this formation will warrant a decent strength. That's going to come in at 98.18 plus 3.3 per hour starting at 6 o'clock p.m. Eastern Standard Time. Okay, in the RBOB, a maintained gap higher tomorrow will leave a minor bullish reversal below. I'm not going to go over all the higher time frame stuff. The trade below 352.26, I said projects us downward 17 cents minimum, 34 cents plus maximum. We detained 34.73 cents of that coming into today, and more than that from 317.44 down to 312.89. Decent trade above this formation, which is a steep formation, but nonetheless comes in at 321.15 minus 31 per hour starting at 6 o'clock p.m. Eastern Standard Time. That'll project this upward 9 cents plus. There is a possible trend line just below here to be aware of. That comes in at 3:11:17 plus 5 per hour starting at 6 o'clock p.m. Eastern Standard Time. And in the heating oil, failure below 393.86 brought in 37.18 cents pressure. We also had bearish calls below 381.43, 378.49, which I said projects us downward 10.5 cents minimum, 59.5 cents plus maximum, of which we are into 21.81 cents. However, I did say that decent break above this formation right here at 365.39 will want a decent strength. So we've seen a break above there in this lower line, and then we've just traveled down back above it. If we fail back below it decently, that's going to warrant a decent pressure. That's going to come in at 361.44. We rally back up to take out this formation. That's going to be bullish too. That's going to be, it'll come in at 385.79 plus 6 per hour starting at 6 o'clock p.m. Eastern Standard Time. And the Brent, we left a medium bearish reversal above on Friday, but we left a minor bullish reversal below on the day. However, that's not as strong until we take out 98.06. Still kind of questionable. If we leave a maintained gap lower in there tomorrow, that'll leave a minor bearish reversal above. Tomorrow also has a high likelihood of seeing range expansion. I would also note that and this is the July contract we rolled into. Let me just back up a little bit on the June contract here. Oh, I'm sorry, I rolled into that already. The trade below 110.60 brought in $14.65 of pressure. The trade above this line right here has this bullish now. This is not a very high quality line. It's pretty steep. And it's going to come in at 92.10. Minus 8 per hour starting at 6 o'clock p.m. Eastern Standard Time. Decent break below there. I want a decent pressure. And again, that's in the July contract. And in the gas oil, the maintained gap higher tomorrow will leave a minor bullish reversal below. The failure below 1254.64 brought in 216.14 pressure. And there's a number of other bearish calls in here I won't get into right now. And going into tomorrow, the RBOB is the weakest of the three, the heating oil in the middle, and the crude the strongest of the three relative to one another. I would also note, I mentioned in a previous podcast that we had left a medium bearish reversal above here that warranted pressure for days/weeks. And we are seeing a pretty nice move down from that to the tune of almost $8,000 per contract. Okay, thank you for watching, and I'll see you in tomorrow's podcast.